Good, good morning, everyone. Welcome to our Church360 Ledger Chart of Accounts and Budget Report. Chart of Accounts and Budgets webinar. Hi, my name is Rod Kiles, and I am the manager of Concordia Technology Solutions Support. I've been here for a long time now, and I really appreciate this opportunity to serve good church folks like you. If you guys want to reach out to me after this webinar, and it could be not just webinar related, it could be anything. You guys can send an email to rod.kiles@cph.org. You can also give me a phone call on my desk phone, 314-268-1315. I'd love to hear from you anytime. You guys can give me a call and I'll get your message. Note all phones and microphones have been muted. Please type any questions that you have into the question window. It should be on the right-hand side of your screen. I've heard that you might have to hover over the screen to get the control panels to pop up. So you could hover over there and you can post that. Joining me today to answer those questions that are going to be in the question or support window is Ms. Kimberly Moon. She's one of our software support technicians. She's been with us several years now. She understands the software. She was part of the development, giving feedback, doing testing, working with field testers, the whole nine. So she'll be able to answer any questions that you guys have, and if not, we'll get the answer to you guys. So agenda. So this is more the standard or typical format that I like. We go through a discussion, we have a quiz, and then we have any questions and answers at the tail end. I scheduled this for an hour and 15 minutes. We'll see how that goes. I should be able to make it within that time period. And then we'll, if not, if it's earlier, then we'll just dismiss earlier. I did want to note that these webinars are recorded and will be available at the end of the week. So we do record these sessions. I started the recording just a few moments ago. So all of this will be available post-session at the end of the week, probably, for you guys to review if you'd like. Of course, reach out to us. I'll have our number at the end of the webinar, and you can contact us there as well. We'd love to hear from you. Okay, so we're going to go through the different things. We're going to start out with setup. So there's a couple of things that you'll need to set up. This is more the traditional type of webinar. Like yesterday was a migration. You're only going to migrate your data once, maybe twice if you kick the tires and need to remigrate, wipe and remigrate. But most cases, hey, you're going to be like, you'll set up the software, you'll go through and you'll set your books and finance year. I want to talk about basic accounting principles before we talk about the chart of accounts. So there's a handful of them that just simply need to be said because we're talking about accounting. So we'll go through basic accounting principles. We'll then go through the chart of accounts, show you how to rearrange your accounts, how to create all the different account types, there's different settings in each one of the account types. So showing you how to enable and disable those. We'll work through the whole chart of accounts process. So account types, equity is something that we brought forward. It was buried within old ledger, so now it's more out front, and those people who are CPAs or accountants or just have accounting knowledge and they understand equity, they have the choice to use equity now. So that is an option. And then we added a thing called equity-backed funds, which is a little component of money that's being reserved for a specific purpose. So, and then we're going to go through budgets. So when we get ready to get to our next session tomorrow about transactions, we enter in our payees and our transactions, then we're ready for reports on Thursday. So budgets are going to be on your reports. Every church should create a budget. So we'll work through those. So I'm excited. As you can tell, I'm talking a little faster than I normally do. I'll calm down here in a few moments. But if you guys are ready, I'm ready. Let's get started. So even before I go to the software, I just want to talk about a handful of accounting principles. These are things that kind of govern what we do inside of accounting. I can never remember the guy who founded accounting. It was years and years ago, probably 500 something years ago, and he came up with the concept, and these rules apply to those concepts. Books, a book is a self-balancing set of accounts with its own assets, liability, income, expenses, and fund balances. So within the software, you're going to have a book. If you're migrating over from old Ledger to new Ledger, those books are just going to come on over. If you're new to the software, you'll start by creating a book, and I'm going to show you guys how to do that. And then after you get your book, then you're going to create these assets, liabilities, income, expense, and fund accounts within the software. And this is how you're going to create your transactions. Once you have those, then you're going to create transactions using those account types. And kind of important to note, there are churches that have multiple books. Most churches will just have one single book, but you can have multiple books. And if you have multiple books, then and you transfer money between these books, it's going to decrease the assets and cause an expense or cause a reduction in equity in that book. And in most cases, we consider this to be a loan. I mean, I guess technically it could be a gift, but in most cases, it's considered a loan, and that amount should be paid back. So books, every single site that is a ledger site is going to have one or more books, mostly one, but one or more books. Now, there's a thing called the finance year, and the finance year helps with reporting. A finance year consists of 12 consecutive months. It's usually January through December 31st. So it's usually January through December. We call that a calendar fiscal year. It could be a non-calendar fiscal year as well. An example of a non-calendar fiscal year would be August 1st through July 31st. I've seen churches do both. Most are calendar fiscal years, but depending on how you want to manage your finances, Advent's a busy season. You may not want to be closing out in December. So, and basically settling and finalizing things in January. So depending on who's a person, they'll decide what type of finance year that they want to use. And these finance years are referred to by the end date of the end year. So if it's a non-calendar fiscal year, and it runs August 1st, 2024 through July 31st, 2025. You'll say that's finance or fiscal year 2025. So right now, most people are going to be in 2024, but if you're running that non-calendar fiscal year, you're already in what's going to be called finance or fiscal year 2025. So, okay, so that's finance year. Cash accounting. People will ask, is it cash accounting or it's accrual accounting? And Church360 Ledger, both old Ledger and new Ledger, they do cash accounting. So congregations usually work on a cash basis. This means that income is recorded and recognized when the money is received, and expenses are recorded and recognized when the money is spent. So accrual accounting, you can go into the future. Now, I know some churches will enter things a little bit in advance, and that's still considered a cash accounting, but if you go too far and too large of amounts, that's going to be considered accrual accounting. This software uses cash accounting. Continued on cash accounting, it's safer since you won't run into cash flow problems when several accounts come due at once. It's easier to track how money comes into and goes out of the church. And it's easier to explain the balances to your congregation and church council because it's mostly just the cash things that you have, or cash equivalents that you have. Okay, double entry bookkeeping. There will always be at least 2 accounts on every transaction. Now, I'm going to mention this today. We'll definitely see it in practice tomorrow. The debits and credits on every transaction must balance. So I went ahead and built in a little example here. When a deposit is made, money goes not only into an asset checking account, but it also goes into an offset tracking account that shows where the money was from or what the money is for. So lots of times deposits are a great example. The money's going to go into the bank. That's the asset side of it. And that is the debit when it comes to a deposit. And then you're going to credit. Most often it's an income account when you're talking about your transaction is a deposit. So you debit one and credit the other side of it. And the reason why I'm looking at the board, even though I've been here for all of these years, I still keep a debits and credits chart on my board: assets, liability, income, expense, equity, funds, and then I just have the D's and C's to the side of them. So I keep that on the board, and I'll show more of that tomorrow. Okay, accounting equation. I know I'm covering a lot here, but accounting equations, assets equals liability plus equity, and you've seen that at the top of the overview now. And I'm just mentioning it for those people who are new to it or you're trying to learn it. You're going to see it inside the software. You're not required to use equity, but there was a lot of people asking for it. So I kind of got to talk about it at least at a high level. The equity, the software will keep track of it for you. If you want to create additional equity accounts or additional equity-backed funds that are inside the system, you can do that. You just want to know just in general that, hey, assets equals liability plus equity. If you kind of draw this equation out, assets equals liability plus equity, then also on the right-hand side of the equation are your income and expenses and your funds. So this is what the total equation looks like for novice people or beginners or just kind of like your people who are recording transactions. The software is going to help you record those transactions, but when we troubleshoot things and try to understand it, knowing this accounting equation that I wish I could remember his name. If one of you guys know it, you can post it in the comments or questions, but he came up with it and it's just genius. It's always in balance, it always works, and if it's out of balance, that's when you know you have a problem. So this is just the basic accounting equation and just knowing assets equals liabilities plus equity. Okay, so let's go ahead and I'm going to stop at account types, jump over into the software, and then we're going to come back to account types so that I can show you, like I can read through the different account types and then create those account types and show you some different things. So let me switch screens here. Here we go. Okay. So, and I'm just going to switch back and forth there. Go back to the PowerPoint slide, come back to the software, go back to the PowerPoint slide, and come back to the software. Let me pause just a second because I went forward yesterday and you guys had a little bit of a hard time seeing the screen. If we can do a quick check, how are you guys able to see my screen okay? Thank you, Kimberly. It's and I'm going to mispronounce it. Thank you, Alva. Thank you, Brenda. Gina. I think it's Patchouli. Luca Patchouli is the guy who came up with the accounting equation. Okay, it looks like you guys can see my screen and it looks pretty good. So I'm not having the same problem as I did yesterday. Okay, so he's the father of accounting. Okay, so this is where you'll land when you get into the software. So when you log into the program, you're going to click on the $sign. It's going to take you here to the overview screen, and it's going to have these bubbles across the top. It's our accounting equation. It says account balances. Assets equals liability plus equity plus income minus expense plus funds. This is always in balance. If it's out of a balance, then there's a problem. I'm going to skip over general ledger. We'll talk about that tomorrow, but I'm going to go to chart of accounts. And to access your chart of accounts, you do it three ways. Or to access an account, you can do it three ways. You can click on chart of accounts. That'll take you to the chart of accounts view. You can also, when you're in overview, you can click on these bubbles. They're links, and they'll take you to the account details view where you can see more information. You can also, underneath search, you can search for an account, like if I wanted to just pull up like a checking account. So there's several options to find an account that you're looking for. And you press enter, and then it will search, and then it will show you a list here. It's moving just a little slow right here. There it goes. And then you can click on the account and it'll take you to that account. So underneath chart of accounts, that's where we're going to spend the next so many minutes understanding how to create your chart of accounts, manage your chart of accounts, edit your chart of accounts, those types of things. So here in the chart of accounts view, there's action buttons here on the left and action buttons here on the right. So add to chart of accounts is how you're going to create an account. Show archived. Archived accounts are automatically hidden, but you can click show archived to include them in the section down here below. Then there's print and export. So print's going to pull up your report view in a preview so that you can send it out to your printer. And then export is going to take this information in here and export it to Excel. Then the one other thing I want to show here is filter by, and this allows you, so if I was looking for checking, this is going to allow you to type into the box and filter your list. There can be quite a few accounts in a chart of accounts. Usually there's only so many assets, so many liabilities, but you get into those income and expense accounts, the list can get really long, and typing in here is a way of reducing that list at that point in time to just quickly get to the account you want to see. And then you can use the buttons on the right to jump over to the accounts detail view, view the register. You can reorder your account. You can use the little pencil to edit your accounts, or you can click on the little container here, which allows you to archive accounts and make them hidden. Okay, so let's go back to our PowerPoint presentation here just for a second. Okay, and let's talk about account types. So there's, I always want to say 7. There's either 6 or 7 account types, and I haven't counted them in a little while. We did add equity-backed funds, so we should be at 7. Assets are a resource with economic value that your church owns or controls. And there's 2 types of assets. There's current, money in checking and or savings accounts, short-term investment stocks, and then there's fixed, which are buildings, machinery, and vehicles. And I'm going to put my notes over here so I can give you just 1 second. Okay. And I'm going to add an asset account now. So I'm going to go Alt-Tab here. There we go. Okay, so inside of here, these are my assets accounts, Central Trust, and these are all the ones that I usually use to make payments and purchase things. And I'm going to click Add to Chart up here. Now, when you click Add to Chart, it's going to pop this panel out here on the right-hand side. And the account that I'm going to add, I'm going to give it a generic name, Secondary Checking. And at that point, I can use an account number. Not all churches use account numbers. There are lots of people that do use account numbers though. And account numbers are a way of grouping accounts together and also speeding up some data entry processes. So lots of times, like an account number, it could be 10,001. And then the second account could be 10,002. The third account could be 10,003. Each account, if you're going to use account numbers, should have a different number. And usually there's a meaning to it, like the first number represents an account type, the last number represents a sequence, and the numbers in between can be a grouping within that accounting system, inside of that numbering system. So if this could be, hey, this is group 2 within your asset accounts. So 1 would be asset account, 02 could be your group, and then 01 could be your sequence. So there's lots of variances. You noticed here in the middle of the screen, which is grayed out right now, I imported this data from Shepherd Staff, and it has its own number accounting system that kind of keeps things together. So it's strictly up to the treasurer or the church on how they want to handle that approach. You do have the option to use it, and there's lots of people who really love using those numbers. It helps them understand what's going on with their finances. I'm going to skip out on that since I don't have a special scenario set up for this. So I'm going to say account number, and then once I go to create account under, then at that point, first it's going to show me the what we call in the account types: assets, liabilities, equity, income, fund, expense, and then there's another funds down here. So if you scroll down further, you're going to see this bolded header for assets, and these are going to be all of the either we're going to call them child accounts or sub accounts at that point in time. So it's like parent accounts and then either child or sub accounts. And so this is assets, and then there'll be additional breakdowns, and you'll see all of your parent accounts, liabilities, which is your account type, and then the ones below that. So what you'll do is you will select, I'm going to select Central Trust. And basically I'm nesting Central Trust under, I'm going to put this secondary checking underneath Central Trust, which is going to be underneath assets. So I'm creating kind of like this waterfall thing. And it's going to allow me to group all of my accounts together underneath a parent account. So all of the accounts that I have at the Central Trust Bank, I'm going to put those underneath Central Trust. So secondary checking is going to go underneath Central Trust. I can select the start date for this asset account, beginning of this year, beginning of this month, today, or other. I'm going to say beginning of this year, and I'm just going to give it a balance of $10,000. And then there's going to be 3 check boxes when you're dealing with asset accounts. Allow writing checks from this account, allow making payments from this account, and allow entering a reconciliation for this account. So if this is a checking account and I'm going to be doing any of those 3 things, then I can check those boxes. Now, not every account allows you to write checks on the account. So only check the ones that matter or apply. You probably should be reconciling all assets, but it is not the case that everyone reconciles all assets. We would advise you to make sure all the numbers match and everything balances, but pick the ones that apply. So we're going to just check all 3 for ours, and then we're going to click Save. Give that just a second. Okay. Okay. So once I've added that here into the system, underneath Central Trust Checking, I actually said checking. Central Trust Checking, and then here is secondary checking. So it's underneath Central Trust and it's secondary checking. Now, if you look real close, there's single bar, double bar, triple bar, double bar, triple bar, double bar, okay? So the accounts that are underneath Central Trust are checking, savings, and secondary checking. And then Central Trust Checking is underneath checking, and Central Trust Savings is underneath savings. So you kind of have to, there's different colors that are here, and you kind of have to look at the bars so that you fully understand how these are nesting. They're also indented, as you can tell, to give you a little understanding that this account is underneath this one. And it's not a sibling, this is a parent account that's above it. So I get these in here and it looks pretty good. Like I like it, but then I say, well, you know what? I really want my checking account to be up here instead of down here. How do I rearrange those accounts? What I do is I go to the parent account that I want to rearrange those child accounts underneath. So I click here on reorder, and then I can rearrange these. So the down arrow moves that account down, the up arrows will move the account up. If you're at the top, you'll only have a down arrow. If you're at the bottom, you'll only have an up arrow. And if you are in between, then you'll have 2 arrows that allow you to jump up and jump down. So I'm saying I want to move the secondary checking account up, and then I'm going to click Save. And that's how I can rearrange my chart order. So I'm going to say Save. Changes were saved, then it refreshes, and now secondary checking is here underneath Central Trust Checking and then secondary checking. So you'll have the option to rearrange and reorder those here inside the system. Now, a couple things to note. When we set this, set the chart of accounts up and went with the whole parent accounts and then child and sibling, and went with that whole concept. We knew coming over from old ledger to new ledger that that's a change in terminology. And like before, we had the concept of categories, and then we had the concept of accounts. And there was lots of times people would get confused and they would say, hey, I've set up all of these accounts, when it turns out that they were categories. So that is hence the name change, where, hey, everything is account and everything is an account, and then you can nest those accounts underneath one another. And then you set the check boxes so that you can determine whether or not you can write checks from those accounts and whether or not you can reconcile those accounts. So the setup is going to be important. We'll help you out with it if there's any questions, but that's some of the reasoning why we went away from the prior design and went to this design with calling everything an account, and then having parent accounts and siblings and child accounts and that whole approach. So okay, so I'm going to switch back to my PowerPoint here. And then next is liabilities. So assets represent the things that you control and own. Liabilities, any debt your church owes to someone else. So there's two types as well. There's short-term debt and long-term debt. I've seen in lots of people's charts of accounts that they do accounts payable, payroll taxes, and offerings for other congregations. So those are short-term debts. Hopefully we don't have any long-term debts, mortgages, bank loans, and automobile loans, but there are times churches have those and they're kind of working through it, just paying those off as quickly as possible. So there's two types of, actually, we also added the ability for charge accounts as well. And I'll show that here in just a second. So any debt your church owns, I should add credit cards to this because that's what a charge account for the most part is going to be, even though I guess technically there's other ways they manage those or have those in existence. So liabilities, any debt your church owes to someone else. We'll go back here and we're going to add a liability account. So I'm going to scroll down here just a little bit, and technically I can filter. I could say liability, and then I could, it'll filter by type as well. And now I'm just seeing my liability accounts. So you can filter by the information that's here inside this view. Okay, so I'm going to add to my chart, and I'm going to say that this is our credit card. Okay, and this is going to be, I'm going to say dash charge account. And you can add in an account number. You can say, hey, where do I want this to show up under? And actually, I'm going to create two liability accounts. I'm going to do the charge account so that I have that for the presentation tomorrow. But I'm also going to add a automobile loan as well. So, okay, so liabilities and start date, I'm going to say beginning of this year, balance of 0, and then as you notice, there is a reconciliation checkboxes here. So this is a charge account. This is going to be a credit card. We're going to be able to make payments with this card, and we're also going to reconcile this card as well. So I'm going to say save, and I'm going to put that directly under liabilities. Let me double check to make sure that's where I want it to go. Yeah, I'm going to put that directly under liabilities, and then put save. And I'm also going to add a car loan. So to add the car loan, actually, let me show the credit card. So that just shows down here directly up against the side. It's not underneath any other accounts at that point in time. Okay, so I'm going to add another one. I want to add like a car loan. So I'm going to create a parent account first, and I'm going to create bank loans. So I'm going to say bank loan, no account number, and I'm going to call that a liability beginning of this year, but I'm not going to make payments out of this account or reconcile this account. I'm going to save that in here. Then that's going to put that under liabilities, bank loan. Then I'm going to add another parent account. I'm going to call that automobiles. So automobiles loan. Yeah. Automobile loan. Then I'm going to put that underneath bank loan. We got that loan from the bank beginning of this year, but I'm not going to make payments out of that account, and I'm not going to reconcile it. And I guess technically with a bank loan, you wouldn't reconcile that anyway, so this isn't going to be something that we're going to reconcile. Then I'm also going to add, and I'm going to say that we purchased a Ford from Ford Credit, and that this account is going to be under automobile loans. So beginning of this year, and we don't reconcile loans, so that's okay. And then save it. So I have bank loan, and underneath it is automobile loan, and underneath it is Ford Credit. So these will roll up into it. And whenever I get to reports and I go to view my reports, if I view bank loans, I'll see the total that is under my bank loan, and these will roll up. Now, if you create an account, and I'm going to click edit here underneath this, and I go back and I say, okay, well, I forgot to put in the beginning balance. Like, didn't mean to do that. Or maybe I did mean to do that. I didn't have it at the time and I need to go back and enter that in. I used to always do like $10,000 for like car loans and stuff like that. And I feel like if it's a new car, we're past that stage of $10,000 car loans. So let's say this is, I don't know, $50,000. I don't know if that's reasonable either. It's been a long time since I bought a car. So we're going to change this to $50,000, balance at the end of 12/31/2023, which would be the balance as of the start of the year, and then click Save. Okay, then that is going to then put that balance in here. So liabilities, $50,000, and then that rolls up our tree there. Now, the next question that is going to be asked, well, how long, like at what point can I no longer change a beginning balance? And there's a couple like points where, hey, you can no longer, if you do a reconciliation, you can no longer change a beginning balance. And then also there's a point in time where the fiscal years will lock as well. And then you can no longer change the beginning balance at that point in time. I did not show how to create or add a book. I'm going to wait till I get done with talking about accounts. Then I'm going to go back and show adding a book so I don't interrupt this flow here. So, okay, so that's how you add in your loan, $50,000. When you add that loan in, it does adjust your accounting equation appropriately. So if I went back up here to the top and I went to overview, it will decrease my equity and increase my liabilities at that point in time by $50,000. Okay, so I'm going to go ahead and go to chart of accounts, go back to my PowerPoint slide here. So that's liabilities. Let's talk about income here. Income accounts, these records are revenue received, and third time's the charm. Income records revenue received in the current fiscal year. These accounts are budgeted accounts. Examples are offerings, interest earned on accounts, and rental property. These accounts zero out to retained income at the end of the year. So we added in a retained income account so that you know how much income was retained in the prior year, and that's going to show underneath your equity at that point in time. Okay, so I'm going to switch back and we're going to skip over equity and go to income here. And the income that I want to add is going to be underneath. I'm going to create a property account, apartments, and then rental property. So, okay, so underneath income, I'm going to say add to create. We're going to create property. That's going to be underneath income. And then you'll notice there's a checkbox. Can you enter a budget for this account? So the way that this works, you can mark an account as receiving a budget once that account becomes a parent account. So if I put an account underneath property, then you can no longer put a budget in a parent account. You can only put budgets inside of like the lowest child account so that everything adds and works correctly. You don't end up with transactions in property and also transactions underneath rental property. So I'm going to say save. So I've created the property underneath income. Then I go to add to chart, and we're going to create apartments. And we're going to put that in, I guess technically I could say property here and filter by typing in my drop list. And I can say allow entering budgets, but remember that it's, hey, whatever the bottom one is, the lowest there in that tree there, that's going to be the one that you can create the budget for. So account name, and this is going to be the actual one we're going to use for our transactions, rental property, and income underneath apartments, and then save. Okay, then if I scroll down, I have property, apartments, and rental property. And the same goes for writing transactions. You can only write transactions out of that child account. So if it's property and apartments, you can apply budgets to those, but also you can't write transactions out of those. It's just that very bottom child account that you can write the transactions out of. Okay, so that's income. Let's talk about expense accounts. Okay, so income and then expense, they kind of go together. Income is what you bring in, expense is what goes out. Or expense accounts track church spending in the current fiscal year. These are budgeted accounts as well. You create a budget, you'll do income and expense accounts. And I'll note right now, the funds also have an income and expense account tethered, so you can budget your funds, you can budget your income, and you can budget your expense accounts. Examples of expense accounts are salaries, materials for church programs, office supplies, postage, and utilities. So the expense accounts are the largest part of your chart of accounts. Now, I warn people when they create their chart of accounts, be careful. You want a chart of accounts that is detailed, that explains and communicates that the information that you want to communicate to people. It's a lot easier to add accounts than to remove accounts. So whenever you're creating your chart of accounts for the very first time, be careful. You can come up with a monstrosity that is humongous and is unwieldy and hard to manage. So just be careful how you create your chart of accounts. You can go back, you can condense it, you can move things around, but it's tougher post creation than when you first get started. So, and these zero out to retained income at the end of the year as well. So all of your income accounts, all your income money for the year minus your expenses, that's going to roll into retained income. And throughout the next year, you'll be able to see how much you brought in, like the net between the two for last year, and that will show under retained income. Okay, so let's go back here and expense accounts. So we are going to add bank fees. And tomorrow I'm going to show how to enter a transaction for bank fees. So add to chart, bank fees. Hopefully no one's paying any bank fees. That was a big thing at one point in time, like banks would charge you fees and even for having a checking account. And nowadays you really shouldn't be in that type of situation. But bank fees, no account number, and we are going to put this underneath church expenses miscellaneous. So I'm going to go down to my expense accounts, miscellaneous. We're going to allow for budgeting and then save it. Okay. And then I'm just going to say bank fees. It looks like we already had a bank fees in there, so I duplicated my work there. But this gives me a chance to archive though. So I've got bank fees here. It's in miscellaneous. I didn't mean to create that, and actually, this mistake really worked out. Um, you'll notice that, hey, there's an archive and then there's a delete. So archiving just hides the account, like it's still in the system, but it is hidden. Once you have transactions, that account is just going to be archivable. We're going to hide it from here. We're going to hide it from reports. You can archive it. Now, if it has transactions in the current year, we're not going to allow you to archive it. You got to wait till next year to archive it. But we're just going to, archiving is more hiding. It's a soft process. Deletion, if you don't have any transactions, you can delete that item and it just takes it away at that point in time. So you can delete accounts that don't have any transactions. Let me refresh my screen here. And you can archive accounts that don't have transactions in the current finance year. So that's the rules on archiving when it comes to archiving and deleting within the system. So, okay. So that is expense accounts. Let's get into equity and equity-backed funds. So equity is the value of church ownership in an asset. So it took us a while to kind of figure out, hey, how did we want to present equity within the software? It's definitely something we were hearing from treasurers. They just wanted the ability. And we think we found a good way of showing it. Examples, we got by default inside the software book equity. You'll be able to see that account. It's going to help balance out your accounting equation. There's also retained income. That's the income and expense from last year. That's going to show within the system. Big note, use of equity accounts is not required if you don't understand them. No worries, we'll keep the system in balance for you. We'll take the income and expense throughout the year, at the end of the year, and we'll roll that into retained income. Come next year, the following year, we'll take the retained income and roll that into book equity. So if you're not familiar with it and you don't understand it, no worries. The software is no more complicated than what it was before. We're just revealing it, and we're allowing those people who are advanced users that they can create their own equity accounts and they can manage equity in the way that they want to. So you can create your own equity accounts. We you have to be advanced to kind of grasp it because it's not something that's normally in our lives where we're dealing with a whole lot of equity outside of our homes and the perceived value of what the if you got a loan or if you sold a house, those types of things. But so we still say, hey, use it underneath the supervision of a CPA, but we'll keep it in balance. If you want to use it, you can. And you can use it in two ways. You can create equity accounts and you can also create equity-backed funds. Now, the question you guys are going to say, and I haven't been looking at the chat window, so hopefully Kimberly's keeping me up to date there. Let me pause one more second. Are you guys able to see my screen okay? I know this is the second time. I'm going to turn you guys can see my screen. Okay, you guys can see my screen just fine. Okay, let's talk about funds. Money reserved for a specific purpose. Now, in old Ledger, we did what I like to call categorizing assets. So restricted funds was literally categorizing assets. You could go into an asset account, you could create a restricted fund. It would then create a unrestricted balance and allow you to add in all of these restricted funds. The balances for restricted funds are held in an asset account. The assets are categorized for a specific purpose. You would go through, create them. They were not budgeted. The balances did carry forward to the next finance year. Equity-backed funds are on the other side of the equation. So assets are on one side, liabilities and equity are on the other side. The balances are held in an equity account, equity-backed fund. Equity is categorized for a specific purpose. So like you might have had a building fund that was underneath your restricted funds. Now you can create a building fund underneath your equity, basically, and we call it an equity-backed fund. Those are budgeted, so you can create a budget, and I'll show that here in just a second, and balances carry forward to the next finance year. This is a preference thing. There are definitely people who like restricted funds. Approximately 350 of our 500 customers were using restricted funds. We heard what people were saying about equity-backed funds, doing funds on the equity side of the equation, so we rolled this out. And people will have to make a decision, like if you want to continue with what you're doing, thumbs up. If you want to switch over to equity-backed funds, thumbs up. You can, on the asset side, take that asset, roll it in to the main account, and then take your restricted, roll it into the unrestricted, and that will then become your main account, and then take your book equity and move that into your equity-backed funds accordingly. So we have an article on there. I'm not going to take us all through that because not everybody's going to be making that decision. But if you have questions about it, hit us up. We'd love to hear from you. Discuss that and kind of work through just explaining it a little bit more. It's pretty straightforward. You're going to want to do this most likely at the end of a year because your chart of accounts is going to change. You're going to be eliminating restricted funds and adding in equity-backed funds. For a lot of people, this makes a whole lot of sense. So for you that it doesn't make sense and you want to stick with restricted funds, feel free to do so. We've added in the ability to continue to create transactions the way that you did in the past. And we'll be showing that tomorrow as well. So that's funds. Equity-backed funds, just a couple like bullet points on them. The equity-backed funds include a self-contained equity income and expense account. They're all tethered together so that you don't have that problem where you've got some of the income in a different account and you can't truly see the balance of that fund. So it has an equity account, an income account, and a expense account. The initial balances are established by transferring money from book equity. So equity is what the church owns out of their assets. So you'll take it out of equity, you'll put it into your book. You take it out of your book equity and you'll put it into your equity-backed fund. And examples would be Building Memorial and World Hunger. So let's go ahead and let's go back here. I just want to add, I've got an Alt tab to get that up. There we go. I just want to add one fund. I'm going to add property improvement. So I'm going to call it property improvement. And I'm going to put that underneath funds. I'm not sure why I have two funds. Okay, I'm going to guess, and I'm going to say it's the second funds. I'm not sure why there's two funds there. And I'm going to say allow entering budgets. I'm guessing the second fund. If I'm wrong, I'll go back and add it underneath the first funds there. Okay, then I'm going to scroll to the bottom here, give that just a second to load, and that shows up here. So that looks right. So property improvement equity, which keeps track of the equity within that fund, and then property improvement income and property improvement expense. So whenever we create transactions, we're going to use income or expense. Whenever we set up the balance, we're going to use the equity portion of it. And this top row, that is going to reflect equity plus income minus expense. So this is going to be your current balance at all times. Okay, so that's all of our account types. let's go and let's take a quick look at budgets. So I am here, scroll back up to the top, and I'm going to go to budgets. So budgets is where you do your budgeting, and most churches are going to budget annually. So they're going to say, hey, this is the amount of money we plan on spending over the next 12 months. There's a couple of approaches when it comes to that. Lots of times people will take the annual budget, divide it by 12, and then spread it out across all 12 months. Like that amount will be the same dollar amount for every single month, and then they'll go forward with that. The other choice is they'll determine an amount for each month. The church has seasons. There's times when the church is going to bring in more money or spend more money, and then they'll, get down to those details and they will budget monthly. You have the choice to create both those types of budgets. You can start out with an annual budget and then adjust it, or you can literally just key in monthly budgets, and there could be months where you don't spend any money or you don't bring any money in. There could be months where you do both. So each income and expense account can have a budget, and then also the income portions and the expense portions, the income portion and expense portions of your funds can have budgets as well. So you can decide, hey, I want to budget all of the things that are coming in and all of the things that are going out, or hey, I only budget operational things. So I don't budget funds, I just budget income and expense. So that's one change that we have here. And you'll notice when I was creating accounts, income, expense, and funds, I have the option to check which ones are budgeted. So I can be like, hey, these are budget ones, these are not budget ones. So I'm just going to add in, let's see, I'm going to pick one that's 0 here. Let's say men's ministry, since there's no dollar amounts here. And I'm going to click on a row. That's going to bring up this side panel, which will allow me to, I'm going to make this just a little bit smaller so that all my buttons show up here. What percentage was I at? 125. I'm going to take this to 110 just for a second, then I'll bring it back to 125. Okay, so inside of this window, this is how you'll manually add in a budget. So I can type in the amount that I want for each month. So I can say 100, and then I can tab, and it could be 100 again or 100 again. That's 110. 85. And then I can just kind of go down the screen at that point in time. So I have the choice to just type in the dollar amounts for every single month. If they vary, then that's going to be the fastest way to manually get those into the system. If I have a prior year budget, I can click on the little loop back circle here to insert the prior year budget. I have zeros on my prior year budget, so I can't do that. And I can go prior year actual as well. Click on the circle and it'll jump it into there. So you can use prior year budget and prior year actuals. You can, down at the bottom, set all to. So if you have the same equal monthly amount for every single month, say it's $100, I can say fill, and then it will fill in $100. Or if I had change by, so say it was 100 and I say, oh, well, really, I want to change each one by $25. I could say fill, and then I could change it to $125 at that point in time. And then the last one, adjust by, so say last year, I'm going to take this number out of here, but prior year actual, I can fill that in if I say, okay, well, we're up by 5%. So this is 125, 5%, 131.25, and I can just increase the overall budget by 5% at that point in time. And I want to give that one a whirl. So at that point, I can save, or I can save and continue by jumping over to the next budget at that point in time. So I'm going to say save, and then that will insert that budget here into my budget view. Now, let's talk about the action buttons real quick, because that's going to transition me into showing you how to do the budget import. So manually entering your budgets, if you want to do that, thumbs up, go ahead. But say it's 2025 we're getting close to 2025, which we are, and I want to um, create a budget in a spreadsheet and then import that budget back into the system. So I can, like I click my drop list, I'm going to select 2024 and I can export that. And I'll have the option to export all or export budgetable. Now, export all includes the parent accounts. Export budgetable just includes those child accounts. So I'm going to say export budgetable. I've been clicking on quite a few of these, but exported my budgetable ones. Then at that point, I'm going to Windows E, and I'm just going to go to my downloads folder, and I'm going to open up that spreadsheet. Now, these are CSV files. I'm going to click here between A and B. So I'm going to click between A and 1 and double click between A and B. That's going to right size my sheet so that I can see my numbers. If I want to make changes, I can directly here in the sheet. I pin a note when it comes to doing this. If you have enter in an annual budget, say this is $1,200, or if you want to enter in monthly budgets, so 75, 85, 95, 125, 35. If you keep monthly budgets, it overrides the totals at that point in time. Now you can put a formula in here and you can calculate it, which works fine, but anytime there's monthly totals, it imports the monthly over the annual total. I just want to use one or the other, that'll prevent confusion, but you can put a formula in here and you can sum it, but it's going to either, these are all zeros and you're importing by total, or you're importing all the monthly ones. So once I have that, I'm going to say File, Save As. I'm going to save this as a CSV, and I'm going to call this Updated for 2025. I'm going to save that to my downloads. So once I've saved that, then I can change my budget to 2025. Give that just a second. Okay. Then I am going to go to import, select my 2025 budget. I gave it a different name. It is a CSV file. It's going to automatically map the column headers if I export the file from the software. So it's going to match it up by name. If you create your own spreadsheet, you may have to match your column headers at that point in time. So if you use December instead, or if you use DEC instead of December, you'll have to match those up. So it's matched up all of my column headers, and then it's going to run through and it's going to look at the names and it's going to match those up. If you exported it just like before, it's going to match. It has an identifier to match those up, so it'll connect up just like that. Then from there, you can go to review, which gives you a little review. I'm going to scroll back to the top here. Anything that is dark, that is going to be a change. Anything that is light, there are no changes to it. So anything that was 0 before will continue to be 0. Anything that is a new number, it'll be darkened, it'll be in a black font there, and it'll change. So I'm going to scroll to the bottom. After reviewing it, I'm going to go to import. Give it just a second there. Okay, and then 2025, and these are my budgets. If for some reason there's a mistake that happens and you need to re-import, you just go back, select a different spreadsheet or update your spreadsheet and then go back and import it again. And that's how you can import your budgets. You can manually put them in, or you can import them. So, okay, so that is the information that I have for today's presentation. It's 11:02, so I still have another 13 minutes before the end of this webinar. We are going to go through, I like to do the quiz And let's see here. Yesterday I just did common questions, but I'm going to do the quiz today. Let's see here. Okay, so polls. And what I'm going to do is we have 4 quiz questions. No pressure. This is just a way to summarize and reiterate a few details. So I'm going to say launch this poll, and you guys should be able to see the poll on your end. I'm going to read the question out loud here. True or false? A fund in the ledger module is the same as the fund in the offering module. And I didn't talk to this or speak to this concept. And the answer should be pretty straightforward. Maybe I shouldn't say and see how you guys do and then double up on it. A fund in the ledger module is the same as a fund in the offerings module. Let's see, how many people are here today? 31 people. Okay, so 31 people are here. We'll give you just a few more seconds if you'd like to participate in the end of session quiz here. Okay, and no pressure. I won't send a letter to anybody's church if this quiz goes badly. Okay, let's go ahead and I'm going to end the poll. Okay, and then share the results. So we had 13 people say true and 10 people say false. So I'm going to share the answer. I wish I'd covered this during the training session, but thankful for the poll. The answer is false. The word fund means different things for each module. Funds in the offerings module are what people donate to: general fund, building fund, etc. A fund in the ledger module is equity reserved for a specific purpose. So inside your chart of accounts, you're going to have a set of income accounts, and you're going to, well, in the future, you guys will have funds. And these funds are representing the money that is donor restricted. It's reserved for a specific purpose. It is rare that it is going to be rare that your list of funds in the offering module 100% matches your list of funds in the ledger module. Like offerings is going to be a list of reasons why people gave. Inside of ledger, it's going to be those things where you're like, hey, I just want this money to go to this specific purpose. So your treasurer will work with the ledger funds, and your financial secretary will work with your offering funds. So there is a difference, and you just want to be careful when, like, if you decide to go ahead and switch over to our equity-backed funds inside of finance, you just want to be careful. You don't want to make that list one-to-one. This is just the things that are reserved for a specific purpose. I'm so happy I have that question there. All right, so I'm going to close that poll, and we're going to go to the next question. Okay. What type of account is, you guys should be able to see it, what type of account is used to create a charge account? So A, asset, B, liability, C, expense. So I gave 3 choices there, and I'm going to change that slide right there. A, asset, B, liability, C, expense. And this is a charge account. It's actually a new concept that we rolled out inside of Ledger, inside of new Ledger. So With this being election day, it's kind of neat seeing the polls and the votes come in. It says 80% voted. Okay, give it about 10 more seconds here, and then I will end the poll here. Okay, end poll and share the results. Okay, so 75% of the people said liability and 25% of the people said expense. So I'm going to close the poll and share the answer. The answer is B. A liability account is the account type you would use to create a charge account. These accounts represent credit cards and can be reconciled. So you'll have the chance to set those up. We've heard from lots of customers who want to be able to reconcile their credit cards. Using a charge account is how you'll do it, and we'll walk you through that during transactions training tomorrow. Okay, question number 3, question 3 of 4. And 3 of 4, launch. What type of accounts allow the use of budgets? What type of accounts allow the use of budgets? Oh, and I have to apologize for, please note that expense-backed funds means equity-backed funds. Expense-backed funds means equity-backed funds. That is a typo on my part. Expense-backed funds means equity-backed funds. Expense-backed funds means equity-backed funds. I might be giving away some of the answer by what I'm saying. Expense-backed funds means equity-backed funds. Okay. What type of accounts allow you to use budgets? And expense-backed funds means equity-backed funds. Okay. Give it about 5 more seconds and end poll. Okay, share the results. So these results are the unique results because you have the option of 5 answers, and with those 5 answers, different people, different percentages and stuff like that. So I am going to close the poll and I'm going to show my slide. And the answer is equity-backed funds, income, and expense accounts. Sorry for the confusion there with that typo there. So equity-backed funds, income, and expense accounts are account types that can have budgets attached to them. To see how closely these budgets are being adhered to, view a report in the financial reports view. So we're going to show you how to do reports on Thursday, our 4th training, and we'll show you how to create those reports and view those budgets. So going forward in the future, you can, as always, you can budget your income and expense accounts, but you can also budget equity-backed funds as well. And I think people are going to like the option of choosing between just budgeting income and expense and or budgeting. Well, I guess there'll never be an or. It'll always be you'll budget your income and expense accounts, and then you'll have the choice in addition to budget your funds at that point in time. Okay, so this is our 4th and final question. It's true or false. And let me share my poll here. Okay, true or false? And I'm going to read the question out loud. Will an equity-backed fund maintain its balance when the finance year is automatically advanced? Will an equity-backed fund maintain its balance when the finance year is automatically advanced? So I did not speak to that specifically, and that also reminds me I need to go back and show books if you guys want to hold on just for a few minutes after I close this poll. Give it just a few more minutes. I do want to show books and show finance year because saying automatically advanced reminds me that, hey, when it comes to fiscal years, we close those fiscal years and keep everything in balance for you. So It's super exciting. Will an equity-backed fund maintain its balance? Okay, so 86%. So I'm going to end the poll, share the results. So 96% said true and 4% said false. I'm going to close the poll. And true, an equity-backed fund will carry its balance over into the new fiscal year, finance year. The net between the associated income and expense accounts will be applied to the equity account at the end of the year. So if you guys hang out with me for just a couple more minutes, we're going to go to the gear inside the software and go to books. And I just want to show this real quick. For those that are starting out from scratch and those that are going to migrate over or import their data from Shepherd Staff, this is the screen where you're going to get started at. You're going to either add a new book or you're going to upload your data from Shepherd Staff. So add a new book, and I'm going to call this one School, and then click Save. So that allows me to have more than one book. If you're going to upload a database, you can click Upload. It'll allow you to choose a file. I've got my file here, and then click Upload, and it'll upload it into your system. It does take a little while. Our database takes about 30 minutes. It does send an import summary to support, and support will then reach back out to you. Once the import completes, you'll be able to see the data in here even before our support team gets back to you. But you can go in, add in a new book, and then either manually create your chart of accounts or come in here and add in additional books if you'd like. And of course, then there's import your data. Now, at times, like we have people who convert from Shepherd Staff, we have people who are going to be migrating over from old Ledger to new Ledger. There's going to be times where, hey, those books are no longer being used. You'll have the choice to archive those books, and then they will no longer accept transactions at that point in time. You can also edit the name of the book. So if you have a typo, or maybe you're St. John's and St. Luke's church, and you combine together, you're one church, and you want to rename the book, at that point in time, you can do that as well. So you have the choice to archive the book. Be careful in archiving. Like I've seen people where all their books are archived for some reason. You always want one book to be unarchived. There is the option to archive all your books, but if you archive all your books and you can't create transactions, then you'll just have to come back in here to books and unarchive those books. I do want to click here to show our fiscal years. Let me refresh that. Okay. And underneath fiscal years, I'm going to scroll down just a little bit. And I remember I was supposed to be at 125%. So it's going to show your current fiscal year. I'm doing a calendar fiscal year. Book settings, you can end, it's going to be December if you're a calendar year, but there's people who decide to change, and you decide to have it end in July going forward. You can change it, update it. And then when you get to July, it'll create the new fiscal year going forward at that point in time. So it allows you to change your finance or fiscal year at that point in time. And then we've changed this interface for the history. Now it's locked, and then it has the word here, so you can tell that it's locked, and then you can see the action. It won't allow you to lock the current finance year, but you can go back and unlock the prior fiscal year up until a year after that, like up to 12 months after. So like right now, this is 2023. Once we get to January of 2025, you'll no longer be able to go back into the prior fiscal year at that point in time. So 2023 will be permanently locked at the end of 2024. We get to January 2025, you can no longer make changes in 2023. That's a change. The reason why we made that change was, well, there was a couple of reasons. Going through the year-end process and having to lock the fiscal years so that balances and everything worked the way that they should, there was lots of people who weren't closing their fiscal year. And it became apparent, and we were like, hey, these just need to automatically lock. So when you get to the end of the fiscal year, like when this gets to 12/31, when we get to New Year's Eve and we transition, it'll automatically roll over your income and expense. No longer do you have to go in and actually go through the process of locking the fiscal year to have that money roll over. And then we lock 2024. So say we're in March of 2025. When we get to March 31st of 2025, we'll lock 2024. You can come back in and unlock it and continue to make changes. All of the options are still there. It's still available for up to a year of the end date of that fiscal year. So we'll lock it. You can unlock it. You can still make changes. You should be careful about making changes, but we do permanent lock 12 months after the end of that fiscal year. So, okay. So that is the information that I have. Thank you guys for hanging out with me a couple extra additional minutes here. I do want to thank you guys for attending today's Church 360 Ledger webinar. If you have any questions, feel free to reach out to me, reach out to my team. You can email us at support@cts.cph.org. You can give us a call at 1-800-346-6120. We'd love to hear from you. Let's see. Okay. And I literally talked the whole time. I don't know if you guys have any questions. You could post them and I could hang on and answer them, or looks like we're okay. All right. I will let you guys go. Thank you for all your patience. And I will see a good percentage of you guys tomorrow. So thank you. God bless.